Hey everyone, hope you're all well and having a good weekend so far. So I'm just going to go over all the setups that took place last week from Monday the 10th of July up until Friday the 14th. So starting with obviously Monday, we'd seen that on Friday the market had given us that final bullish expansion in towards a major buy side target such as the weekly or daily BST. We can also see the price had given us three bullish sessions of rise with that final extended run. So bias on Monday was bearish, but also there was a possibility of price obviously taking out the weekly BST as well. Now, taking a look on the 4-hour time frame. So just a second. All right, so taking a look on the 4-hour time frame. It's pretty straightforward. We can see that price had delivered. So we have this initial accumulatory range down here with obviously this being the low of the range, and this being the intermediate high right there. Price trapped around the range before breaking, giving us that first expansion. Then the market obviously consolidated, accumulated around below the first expansion for a while before eventually breaking above, giving us the second expansion right there, right? And then eventually obviously price after taking out these short-term lows proceeded to give us that third bullish expansion on Friday. So just before New York open on Monday, obviously the intended directional bias is bearish in line with the fact that price had delivered that third final expansion to the upside. So bearish was the better direction, with the next drawn buy side liquidity being this swing high and the next drawn sell side liquidity being this imbalance. Now, taking a look on the 1-hour time frame, we can see the price had delivered on one bearish expansion to the downside, contracted, and delivered a second bearish expansion to the downside. Now, it is important to note that obviously this is a reversal phase of the cycle. So although the intended bias, of course, is bearish on the 4-hour, and as we can see, is bearish also on the 1-hour time frame, it is important to note that obviously price could give that third expansion. So we're looking to either trade short into that third bearish expansion to the downside, or we're looking to obviously trade long from that third leg, anticipating some sort of a bullish continuation to the upside. So again, I'm just going to just take this back a bit. Right there. All right, and then I'm just going to map out the EU as well as the London Open timelines. There we go. Right, so next draw on buy side liquidity, as we can see on the 1-hour on this specific trading day, was this initial swing high right here. So this was the next draw on buy side, and of course, the next draw on sell side relative to where price is. I'm not sure why my line was deleted. Is this swing low down here? It's the next draw on sell side liquidity on Monday. So going down to the 15 minutes time frame to essentially put it all together, we can see very clearly the price. So we have here our most recent ABC, so it's the most recent range prior to the open of the European session. So again, what we're anticipating is bearishness. We want to see price interact with either the BST or the SST, but until one of those two areas are interacted with, we don't really have any specific setup. So now the question, of course, is price has given us a bearish break outside of the Asian range, right? So the bearish break took place right there. Now it is important to note, so I'm just going to just play this bar by bar, right? It is important to note that obviously this candle closed outside of the initial Asian range. The second candle also closed outside of the initial Asian range. So at this point, of course, this is our bearish order block, right? So we're anticipating price to trade in there. It doesn't matter. This could happen in Asia, London, or European or the London Open. So the next candle you can see trades right into that order block and pulls away from it. Now, of course, it's sometimes confusing to say what a retest is, but of course, a retest could either happen in a single candle or price could come back up later on and retest that bearish order block. So we can see that happens in the European Open. Price swings back into that bearish order block, giving us that retest. Now, we can't obviously take any trades at this point in time because, again, a very important criteria that we're waiting for is to ensure price takes out at least the H1 BST or the H4 BST as a part of our trading system. So that doesn't happen. So either way, we have to wait to see where price heads just before that 6 p.m. candle. So we can see that before the end of the London trading session, price doesn't. So 6 a.m. New York time is the cutoff time. Price fails to actually take out the H1 BST or SST, giving us a confirmation of some sort of a setup. But what we can see is that in the New York session, so a New York trading session begins after 8 o'clock. We can see price trades right into that imbalance as well as the H1 SST. Now, at this point, the most reasonable setup to anticipate is a 1 minute VRR. So 1 minute VRR is where price will break outside of the Asian range, retest the bearish order block, and then take out the recent low. And then from the below the recent low, we're looking to obviously trade a reversal setup long. Now, of course, the BRR would make sense as well. The reason being is because, so I'm just going to just take this back to the 8 a.m. just before the 8 a.m. candle. If you take a look on the 1 hour time frame, we can see that when price trades into that H1 SST target, we can see quite clearly that this is the third expansive leg. So hence why, obviously, if we're going to be going long, it makes sense to go long from the third expansive leg into a high volume area. So if one was going to trade in New York, now, of course, New York trading is not something I recommend unless you're very confident in identifying these setups and anticipating movements in New York in line with the London movement. But if one was going to trade this in New York, then the most reasonable setup is obviously to have seeked or to have looked to have gone long from the imbalance. We can see that this is a classical break of market structure. So a reasonable entry point, classical break of market structure would be the breaker with a stop loss going 5 pips below the low right there. Right, we can see this is where the breaker is. So obviously to go long from the breaker, there we go, midpoint of the breaker to be precise. Stop loss going 5 pips below the low, right? And of course, because this is a reversal trade, it sometimes doesn't always trade into that area to mitigate. But the first target ought to be these equal highs, which is basically where the high of the London session is. And the second target is going to be that H1 BST, okay? Now, of course, H4 BST could act as a good secondary target as well, but I would say the most reasonable target was the H1 BST. So in this case, what we can see is that price didn't quite trade into trigger that entry confirmation at the breaker, which is unfortunate because essentially what ensued afterwards was a very big run to the upside. So on Monday, there was, technically speaking, there was no setup in the London session at all because price failed to hit one very important criteria, which was to take out the BST or the SST for the H1, which it didn't do until the New York session. And if you had decided to take a reversal setup in the New York session in line with the BRR1, you wouldn't have been able to actually get, unless you were obviously taking some sort of entry outside of the system, you wouldn't have been able to get a valid entry to have taken this opportunity long. But that's fair enough. That's Monday. Of course, not every day you'd see something. It's just all about just being consistent every day and capitalizing off the opportunities as they come. So going into Tuesday, we can see that price had delivered obviously on a reversal. Now, of course, this candle can seem quite confusing and tricky, but this is a reversal leading into a reset, okay, in a single candle, and it can happen. So this is technically speaking a bullish session. Level 1, price has taken out the weekly daily BST, okay? So it's very important that we now adjust these levels. So we now need to identify a new draw on daily buy side target. The weekly obviously stays the same up until the end of the week. But at this point, we can see the next draw on buy side liquidity on the daily is a massive imbalance. So in this case, what I do is I just draw the imbalance up until where price is at the close of the previous day's candle. There's daily imbalance. There we go. And then go down to the 4-hour time frame. Again, we're just going to forward play this into just before the European Open. There we go. So we can see the next draw in this context. The next draw on buy side is this imbalance right here. Next draw on sell side is this imbalance below. And we can see that price has delivered 3 expansions to the upside on a 4-hour time frame. And then what price did is price came back down to obviously retest, to obviously close, to retest a buy side area, which is this imbalance, before doing what? Before resetting long. So this is a bullish reset, obviously on the 4-hour time frame. Now, taking a look on the 1-hour time frame, we can see clearly that price had obviously given a bullish reset on this time frame as well. We'd seen 3 bearish expansions to the downside, and then afterwards, what the price did, price came all the way back up, giving us that first bullish expansion to the upside. Now, again, we're going to be obviously looking to let's take a look. There we go. All right, so just to adjust the timing of this, we can see that price has delivered first expansion, and just before the European Open, price is in the process of giving us a second bullish expansion, with the next draw on sell side liquidity being this swing low down here, and the next draw on buy side being this imbalance up here. Now, if we take a look on the 15-minute time frame in terms of now looking for opportunity, we can see that obviously a defined Asian range is A, B, C, right? What we now wait to see, because bullish is the better direction, we can see that price delivers a bullish break outside of this initial Asian range, trading into that crucial H1 buy side target. So at this point, obviously, because our bias is bullish in line with the current cycle, BRC is the setup that makes the most sense. So BRC, we're obviously waiting for price to trade into that bullish order block. And then from the bullish order block, what we're looking for is obviously we're looking for that 1-minute break of market structure, which we obviously then seek to trade long in line with the bias. Oops, that's way too fast. Okay. So obviously what we see here, now, this is another day where price, obviously traded very deep into this bullish order block, right? And then obviously after trading and filling out this imbalance, price proceeded to give a very aggressive shift, which is obviously a classical break of market structure to the upside. So there's BMS right there. Right, and then after giving this break of market structure, obviously this is the breaker. So AOI is to enter at the breaker, right? Breaker or last down close candle, either or makes sense. Stop going 5 pips below the low, right? And then what one wants to do is to go long from the breaker with the first target. With the first target being where? First target being the recent high. And the second target, we can see that the ADR on this week was absolutely crazy. So a lot of juicy opportunities, but of course, juicy opportunities also means very fast, rapid price action. And the second target, of course, I believe should have been the H4 BST, which is this massive imbalance. Okay. Now, what happened? Of course, price traded into the order block, and then obviously we didn't really get a feel on that pending order at the breaker. There was another opportunity on the 5 minutes, because I do look at both time frames simultaneously, looking for opportunities. If the one doesn't provide, then the other will. But also on the 5 minutes time frame, you did have a break of market structure as well. Let's take a look there. So this is also a classical break of market structure, right? And of course, with this classical break of market structure, right, the AOI is essentially last down close candle right there. And again, although price came very close into it, obviously feeling this trading into this imbalance, it didn't quite mitigate against that order block. So again, it's a very important sign because unmitigated areas on Monday, so unmitigated area on Monday down here, and unmitigated area on Tuesday. What are these indicating? These are indicating that in an upcoming reversal, price is highly likely going to be trading to mitigate against these areas very, very soon. So obviously these areas would present profit taking opportunities for us in future shorts. So either way, this was a very, very nice classic BRC setup scenario. It was just unfortunate that we didn't really get a trigger on this setup. So that was on Tuesday. So Monday, no setup at all. Tuesday, BRC, but no trigger. So going into Wednesday. Okay, so Wednesday, we can see 2 sessions of rise right there. So again, daily bias is bullish. If we go down to the 4-hour time frame, right? Again, just to forward play this just before the European Open, we can see that price had delivered on reset to bullish expansion. So again, that bias is still bullish. Next on buy side is still this 4-hour imbalance. Next on sell side is this imbalance down here. If we go down to the 1-hour time frame, so what we're looking for is, okay, where is price just before the London Open, right? So just before the London Open, we can see that, sorry, European Open, we can see that price has obviously delivered on 1, 2, 3 bullish expansions to the upside. So at this point, a 1-hour bias is indicating that a bearish reversal is imminent, and short on the 1 hour is the better direction, right? So obviously what we're looking for here is the potential move, because price yesterday traded into an area of buy side liquidity. What we could see is a price moving into an area of sell side liquidity. Short is, we're either looking to sell into sell side, or we're going to be looking to buy from sell side into buy side, depending on what opportunity presents itself to us during the session. So the range is pretty defined. We have points A, B, C, and then just before the London Open, we can see that price gives 2 very nice bearish breaks outside of the Asian range. So now the AOI is obviously going to be our bearish order block right there, right? So again, where bias is in line with a reversal, obviously this is our H1 SST. We're looking to take that reversal trade short. Price is giving us a bearish break outside of the order block. So again, we're looking to go short at the retest of our bearish order block right there. Okay, the very small retest. Let's say, oh, 1 second. All right, so looking to go short at a retest of the order block, and all we're simply looking for is a 1-minute confirmation. So price trades into the order block, touches it ever so slightly. Obviously, this is all of this is just consolidatory activity. Price creates an initial low right there. This is the low responsible for the highest high. So we're either going to be looking for price to break below this low, or alternatively to give us a secondary break and create an imbalance, right? That doesn't happen, so we're just waiting. So this is where price breaks structure right there. So we have here a classical break of market structure. Okay, so BMS. AOI is going to be, so again, we're looking for that last bullish swing responsible for that displacement to the downside. So this is my area of interest. So this is where I'm going to be looking to place my pending order, short position at the last stop close. Stop loss going 5 pips above the high. There we go. Now, reversal setup for this was, so the way that I looked at this was, okay, price is obviously going to give us some sort of a reversal. Our first target should be either the H1, the recent low, the H1 SST, or the H4 SST. But in the case that price would not, for example, trade into these areas, one thing that I was also looking for on the 1-hour time frame was some sort of a short-term low that the market could trade to. So obviously this is the short-term low down here. It's an area of interest, right? And that short-term low right there serves as a very good area to take profit. So you could aim TP1 and TP2 at that short-term low, because obviously it wasn't possible to get a 122 to the recent low. Or alternatively, like I usually would say, if you do want to really get a 122, you could also tailor your entry. But for me, this is something that made a lot of sense with that move to the recent low, because this was a reversal setup. So essentially, price obviously have to break in structure. Just consolidate it for a bit before shifting and taking out that short-term low. So again, on Wednesday, because I mean, there was that break of market structure to the downside, but there simply just wasn't any clean. So just Control Z that. Yeah, there wasn't any clean opportunity where price traded back into that last upwards candle that would have allowed us to take in that short into the short-term low. So again, there wasn't. So this is a massively unmitigated zone right there. Obviously, so we could anticipate some sort of a bullish continuation in the New York session. So that was on Wednesday, right? That was on Wednesday. Let's see, 15 minutes, 1 minute as well could work. Now, I know that someone asked me on this day as well, the possibility of a BRR, which I said was very, very possible. The reason being is because obviously the 4 hour was still bullish, and the 1 hour was just giving us that partial reversal. So it was very possible to have just waited for price to obviously trade into the short-term low, and then from there look for a bullish continuation. But it would have been a very tricky opportunity to have taken, because price essentially didn't really give any clean opportunity to enter. Because if you look at this, right, so price traded, this is in New York session, by the way, price traded below this low, broke market structure, and then broke below the low again, and again broke market structure, and then broke below the low again. So and the reason this was happening was because there was a red news event that was about to take place. That was US core inflation. So if you were, for example, setting 5 pip stop, so if you, for example, took this entry and you set a 5 pip stop, you would have been stopped out, right? But now let's say that, okay, you re-entered and you set a 5 pip stop again a second time on the re-entry, then you would have been okay. I personally didn't take this trade because I just didn't see any sort of clean ways to engage in that bullish continuation, because price was really, really choppy up until US core inflation. But either way, this is, so if you had been stopped out, you could have re-entered there, and then from that re-entry, you could have traded that reversal to the upside in the New York session if you were trading New York. So, but this is a good example actually of a news trade in line with a, so obviously a break, retest of the order block, unmitigated zone into obviously that short-term low, and then from there, that 1 minute reversal to the upside in the New York session. So that was on Wednesday. Now going into Thursday. So Thursday, we've seen 1, 2, 3 bullish sessions of rise. So bullish is the better direction. Going into the 4 hour time frame, again, just before, oops, one thing I just need to make sure on the daily is that my levels are intact. Right, so price has already taken out this imbalance, so get rid of that. The next, oops, or alternatively, yeah, the next draw on daily sell side is this imbalance down here. Okay, so we've seen that price obviously is giving us 1, 2, 3, see, 2 sessions of rise. So what we're anticipating is, 1, 2, 3 sessions of rise into Wednesday. So what we're anticipating is some sort of a reversal. Now, taking a look on the 4 hour time frame, we can see that price had essentially given us a reset long, and that reset long was for 1, 2, and then obviously took out a short-term low, and then 3 expansions to the upside. So at this point, because price is in that third expansion, and if we take a look just before the European Open, we can see that price is within that third expansion. So what we could anticipate on going into Thursday is some sort of a reversal or a continuation of this expansive cycle. Now, next row on buy side is a swing high. Next row of sell side is this very small imbalance down here. Now, 1 hour time frame is pretty much the same thing. We can see that price had delivered on the first expansion, contracted, secondary expansion. And then this secondary expansion, we can see that just before the London Open, obviously price traded back into this initial range. Next row on buy side is this imbalance. Next row on sell side is the swing low down here. Okay, we can see that price the previous day had taken out sell side, right? So obviously what we're anticipating is for price to trade into some sort of buy side liquidity pool, and then we can anticipate a reversal. But looking at the 1 hour time frame, because obviously on Wednesday we had a bearish move to the downside, but then we had a bullish reset. At this point, bullish is the better direction on the 1 hour time frame. So the 1 hour time frame is indicating that we could get more bullishness on pound dollar. So taking a look on a 15 minutes time frame, obviously what we're looking for is some sort of a confirmation within the Asian range to go long or short. So it's an Asian range, ABC. We can see the price obviously traps below the Asian range, and London Open, what do we get? We get a bullish, we get a bullish break outside of our Asian range, right? So the break happens after price obviously closes firmly outside of this general area. Now at this point, of course, AOY is the bullish order block. So essentially what I did, I just waited for price to trade into that bullish order block for an opportunity to go long. Let's take a look. Right, and yeah, that didn't happen. This happened in the euro dollar, but just didn't happen in pound dollar. So euro dollar, the same structure happened. Price retested the bullish order block and then rallied. But again, pound dollar, as we've seen for most of the week, we're getting that unmitigated order block, which again is very important, because if price is really, really driving liquidity to the upside, we can anticipate, this is why I'm super excited for the coming weeks ahead, is that we can anticipate that price is likely going to give a prolonged bearish reversal for that could sustain itself for days or weeks on hand. So again, price before the end of our trading session didn't retest that order block, which would have enabled us to take that bullish continuation to the upside. So again, no setup on pound dollar on Thursday. So going into Friday, we've seen a few days like of bullish rallying, no solid setups, because price has left a lot of unmitigated zones, which obviously is an indication of an imminent reversal to come in the future. So we can see that price has delivered 3 bullish expansions with that extended run on Thursday. So for me, the bias on Friday was very clearly bearish. If we take a look on the 4 hour time frame, again, just going into just before the London Open, we can see that price delivered on a third expansion and then a 3x, so which is an extended move of this initial third leg. Going into the 1 hour time frame, we can see very clearly that price delivered 3 bullish expansions to the upside, and again that extended leg of this third leg. And then just to obviously move into the timing, so just before the European Open, we can see that price created a swing high. So this next row on buy side, it's next row on sell side. Now with reversal trades, a lot of the time it's better to look to sell after price purges this high, and then from that high you're looking to sell. Now, of course, it's important to note that this high is obviously price taking out the previous day's high. So selling is a good opportunity from around this area, but you want to make sure you wait for price to take out buy side liquidity first, and then you're looking to sell. Or alternatively, if price runs to sell side, you could be looking to buy from sell side to buy side liquidity pool. Now, 15 minutes time frame, we had a very obvious range right here. So obviously what we're waiting to see is for price to trade outside of that range, which it did. Now, AOY in this case is, of course, we're still looking to sell, right? But in this case, our area of interest, because we have a bearish break outside of the range, is this order block right here, okay? So we just wait for price to interact with that order block first. And the moment it does, right, this alone gives us an indication of what kind of setup to wait for. Now, I believe the better direction to trade is short because of the 15 minutes, no, the 1 hour and the 4 hour, as well as the daily confluence. So in my view, the better direction is the better setup on Friday was to wait for a BRC, so which is a break, retest, continuation in line with the bias. Now, price traded into the order block, didn't really give any setup, any confirmation within the order block. 1 second, let's just take a look. Oops, just slow down, slow your ass down. And then price obviously traded all the way up, obviously above the order block, traded back to this initial high, right? And then from there, right, gave a break of market structure right there. So this is a classic break of market structure. And again, this is a very typical thing that's been happening for the whole week, because for me, a lot of the good setups took place on euro dollar this week. But price traded right into that high, right? And then thereafter, right, so just before the end of our trading session, you have a classical break of market structure. Area of interest was obviously to enter at the last upwards candle. Price failed to trade into the last upwards candle, right, and simply just proceeded to run away from there. And obviously, if I'd gone short there, my first target was obviously this initial low, and the secondary target was the H1 SST. But unfortunately, price again left a further unmitigated zone in that reversal on Friday. So to sum this up, right, last week pound dollar wasn't really productive of any setups. That was clean. Like that, we saw the opportunity. The direction of bias obviously was there, in line with where price moved. It's just that obviously when it came to executing in line with that, price didn't quite trade into those AOIs. And that's okay. It happens sometimes. So again, like I said, unmitigated errors are very, very big signs that price will be looking to reverse to that error in the near future. So again, these errors you should definitely take note of, because these errors would form a good profit-taking objectives in the shorts that we're going to be looking to be taking next week. So that's it for myself anyways. I'm wishing hope this session has helped. I know last week was a very, very aggressive week. There's definitely a lot of lessons to take last week, especially as we had a lot of red news dotted all over the place. But super excited for the week to come. Definitely study and brush up on your analysis, because you are definitely going to need it in the weeks to come. So all the best, guys, and have a great weekend ahead.